Hello, again this is Vasant Ponkshe, a retired bank officer from Bank of Maharashtra. My mobile number is 94223-19827. Now I'm starting part F of my video series, video number 4, series number 2, Bank Nationalization to Bank Privatisation, in which I am covering the history of public sector banks and private banks in the Indian economy from 2005 to 2020. So I start with part F of the series, and G and H parts will come shortly. In 2016, in the budget session of the parliament, Mr. Modi government brought the insolvency and bankruptcy code, as I told you that day, and this process should be completed within 180 days. That was the provision. And if the insolvency cannot be resolved, then the assets of the borrowers may be sold to to repay the creditors. That was the idea, and this law drastically eased out the process of doing business according to the experts, as it considered, and many to be the most important reform in the Indian banking system right from 1991. So this provision of 180 days in the IBC code was considered to be the next best reform after 1991. Now, National Company Law Tribunal, NCLT, is the outcome of that was the IRADI committee appointment. We suggested that, and the legal system in 2002, which was placed under and the basic framework was Companies Act 1956, and based on that legal system, it came in 2002, and due to litigations in that, as far as the constitutional validity of NCLT is concerned, it went for 10 years, and therefore it was notified under the Companies Act in 2013. Now, NCLT is adjudicating authority for insolvency and resolution process of companies, had a limited liability of the partnerships, and under the Insolvency Bankruptcy Act, it was covered in a very nice way. Now, this Act, Code of 2015, was introduced in Lok Sabha in December 15, as I told, and it was passed in Lok Sabha on 5th May 16 and in Rajya Sabha on 11th May 16. And the court received the assent of President of India on 28th May 2016. And the Act gave lots of force from 5th August and 19th August, and it came into the force effect. And the latest position, as they say, that the aim of the code was to protect the interest of small investors and make the process of business doing less cumbersome. The IBC had 255 sections and total 11 schedules. That is the specialty of the IBC. And the tribunal was established under the Companies Act 2013, and it was constituted on 11 June 2016. And as I told you, as per the recommendation of the IRADI committee. Now we come to major big reform which took place on 8th November 2016. Everybody knows about that. And demonetization was announced, and within the span of 3.5 hours, all the 500 rupees and 1000 rupee notes with the picture of Mahatma Gandhiji on those series, those were cancelled, and it was said that they will be kagaj ke tukde just from the midnight. And the token that even it became the alternative to the rupee when the government announced to demonetize 80% of the currency in the market. It was in the circulation, and 80% currency was one stroke demonetized, and lot many issues they came up about demonetization. Experts from both sides, for and against demonetization, we all have heard all these things, and that is not the main topic of this video. But I would like to share, as we all know, that the bank employees, they did their best, and their efforts were appreciated. Modi ji appreciated their efforts. He appreciated that even retired bank employees are coming and joining hands with the working employees, and crores of rupees of notes were being received, counted, replaced, and this demonetization was considered under the provisions of demonetization of high denomination banknotes, and the act was introduced in 1978. What was that act? That time also, on 16 January 1978, 500 and 1000 rupees note, as per the then President of India announcements, the demonetization took place, and that time Morarji Desai of Janata Party was the government, and H.M. Patel was the finance minister, and I.G. Patel was the governor, Reserve Bank of India. Now, this time, as far as demonetization is concerned, we all know the controversies, whether RBI permission was there, whether RBI was allowed, and how about the printing of 2000 rupees note, and how much black currency came back to the system, and how much black money could be revealed. So, these are many things. But the point here I would like to make, that the call was given by government that 80% of the currency was made kagaz ke tukde, we can again repeat that phrase, and bank employees that stood and honored the commitment of the government, and they worked all time. But in many banks, the overtime was not paid, or in some banks, even if it was paid, it was taken back. And since then, the feeling of the bank employees, we all know, is not good about that. There is a feeling that howsoever best they will work, howsoever efforts they will take, they are not being properly appreciated. Now, the constitutional validity of the Demonetization Act of 1978, that time also it was challenged in the Supreme Court, and they said that the ground was the fundamental rights. But the Supreme Court ultimately upheld the act, and the Supreme Court says the Demonetization Act of 1978 is a constitutional act. As I told you, much can be spoken about demonetization, its implementation, its actual utility, whether our economy started coming down as a result of demonetization. Some say GDP has taken a hit, some say it was most required, and many duplicate notes were there in the circulation. So many things are told about. But this was a point which I, as a part of history student, I had to cover this point in my submissions. Now we come to the small finance bank position. From 2016 to 2020, small finance bank, we will have to look to that area. And the objective of the small finance bank was to have a successful financial inclusion. So RBI granted approval in 2016 to 10 entities to set up these small finance banks. Since then, 10 have received necessary licenses, and a small finance bank is a niche type of bank, they say, and it can cater the need of the poor people, those who are traditionally not used to deal with the scheduled commercial banks or public sector bank. And the condition that time was that each of the small finance bank is open for at least has to open 25% of banks in unbanked area, not only rural, in unbanked area. And the another condition was that the small finance bank should hold 75% of its net credits to the loan to the firms, those who are under priority sector, and 50% of the loans of its portfolio should be of less than 25 lakhs. So what was the purpose? No big loans, no small loans, go to the unbanked area, give your loans, small ticket loans, only to the borrowers, those who fall in the priority sectors. Now, there are 10 small banks, let us name them: AU Finance, Capital Small Finance, Equitas Small Finance, ESF Small Finance, FinCare, Janus Small, North Small, Suryodaya, Ujjivan, Utkarsha Small Finance Bank. Then came other reform, 2016. Initially it was Indradhanush, now it came as a Gyan Sangam. Gyan Sangam II. 2 days banker retreat was conducted and group discussions on key issues such as ensuring greater autonomy for the banks, improvement in the risk management practices, the recapitalization requirements, the real requirements, the improvement of asset quality of the banks, and curb black money. Those were the main aims of Gyan Sangam II. And the focus areas. The focus areas that time of the government was also financial inclusion and direct benefit scheme, DBT what we call it, and it was expected that there will be an extensive review of Pradhan Mantri Jan Dhan Yojana, the aim of this Gyan Sangam II, and the objective of the retreat was to arrive at a common understanding among professionals, regulators and the government on reforms required in public sector banks. That was also a main aim. The then Reserve Bank Governor Raghuraman Rajan, who spoke on the asset quality review, and he suggested that the major hint he gave to the public sector banks in the third quarter was to set aside more money to cover the bad loans. That was said at the time of Gyan Sangam II. Then the State Bank of India, country's largest bank, it recognized 50% of their non-performing assets to be declared under the asset quality review. So that was a major step. And Oriental Bank of Commerce, it recognized more than 80% NPS. Those were required to be declared. And RBI allowed banks to recognize some of their assets like real estate, foreign currency, deferred tax, reducing extra capital needs like that. And the state-owned banks, it was reduced to the extent of 15%. So that gave a great relief as far as the capital adequacy is concerned. And this move was aimed to align the regulatory provisions for the capital of the banks in terms of Basel III standards. So that was a major initiative. And it is said that during that Gyan Sangam II, the Prime Minister was very categorically emphasizing the need of complete autonomy to the banks, and he announced that nobody will intervene in the internal working, internal decision making, directives about loans and all that. There shall not be any pressure from any of the ministers or government authority. Then another major reforms which took place in 2017, and it was about mergers. All the subsidiaries, remaining subsidiaries of State Bank of India, they were merged. And they were merged in State Bank of India. Those were State Bank of Travancore, Bikaner and Jaipur, the State Bank of Mysore, State Bank of Hyderabad, the Bharatiya Mahila Bank. All those banks were merged, and the actual merger took place on 1st April 2017. The another reform which took place in 2017 was the passing of GST bill, and it was considered to be the most important step in the history of India, another historical step, and it was launched at the midnight in the Parliament House at the hands of the President, Dr. Pranab Kumar Mukherjee ji. And they took it as another form of independence from all these laws and regulations and red tapeism and all that. But we all know today, it's not the issue of criticism on GST, but we all know today the fact remains that the collection of GST is hampered. We don't know whether it is because of the demonetization, we don't know whether it is because of the implementation of GST, but we know many states are complaining that their share is not being paid back, refunded back. And recently, as I told you, it has been announced that the shortfall of 2.35 lakh crores shortfall is there in the GST. And in most humble way, it can be said that GST is not that settled, and to create a vishwas in the system, government had to come with different schemes, and the states are complaining, and the tussle is going on. Central government is advising the states to pick up the loans against the refunds they are expected to get from the GST contributions, and state governments are saying that central government should pick up the loan and give it to us because central government will enjoy the loans at a better rate of interest. In February 17, another reform, Indradhanush II. Initially it was Gyan Sangam II, now Indradhanush II. And this government plan of Indradhanush II was a recapitalization plan of public sector banks. And after completion of the asset quality review, it was a precondition. After the completion of an asset quality review, which was started in December 15, they said the recapitalization plan will be discussed, and banks were advised to make adequate provisions as far as the NPAs are concerned. And in the Central Bank of India, that is Reserve Bank of India, it kept a deadline of March 17 as far as completion of asset quality review, we fondly say as AQR. And post AQR, recap was to be considered. Now, under Indradhanush II roadmap was announced in 2015. Government had announced the recapitalization of 70,000 crores over 4 years, and while they have to raise further capital of 1.1 lakh crores from the market, that was the condition. The government will give 70,000 crores and bank should gather 1.1 lakh crores from the market, but very few banks could collect their own quota, and government had to further capitalize the bank to keep with the norms, risk norms as far as Basel III is concerned. So in line with that plan, the public sector banks were given 25,000 crores in 15-16, then another 10,000 crores in 17-18, 18-19, and the government also announced the infusion of around 23,000 crores out of 25,000 crore marks for 13 PSBs. Now we come to April 17. That time Reserve Bank of India announced the guidelines from prompt corrective action. This is a new concept as far as Indian economy is concerned. Consider it's a new concept, but I would like to share with you my research and my study tells me that this idea of prompt corrective action is a British idea drawn by British Central Bank way back in 1951-52. See how ahead of us they all were there. And what were the parameters of prompt corrective action launched by RBI? Capital, assets, quality, profitability and leverages. Those were the important parameters. Then return on assets and all these things were there. And as I told you, the concept has been derived from the British financial system. And it expected that the bank should not go bust. That was the idea. And RBI is supposed to come into the picture and place some trigger points and monitor assets, loan givings, going for more commitments and take corrective actions on the banks, so that then there were restrictions on recruitment, there were restrictions on expenditure, restrictions on new loans, restrictions on new deposits, and in case of some banks, no deposits were to be accepted and no new loans were to be given. To that extent, the banks were choked up, how they will remain. But that's a different issue. Now, to contain NPA and to stop new NPAs taking place, some coercive actions were required, and that is why prompt corrective action, the concept was introduced, and more than 10 banks they had to be forced in PCA, and step by step, all banks have come out. Hardly one bank is still there, but we are sure it will come out very sharply. Now, in July 17, the present government, as I told you, led by Narendra Modi ji, it approved the little further reforms, and the first proposal which was put forth by the NDA government in those days, Vajpayee's government, it was put through, and that is how this big reform, as I told you, going little back, so it has got the history of GST. And the GST replaced many indirect taxes with the unified tax structure, and there was a showcase dramatically reshaping country's $2.5 trillion economy was to be reshaped. Then in August 17, another initiative was taken with backlash. Government introduced a bill FRDI in the parliament in August 17, and it was introduced in Lok Sabha, as I told you, in August 17. And the idea was to have a resolution framework for the revival or closure of the financial institution. That was a bold step. Either you revive or you close the financial institution, including commercial bank, insurance companies, NBFCs, cooperative banks. And the bail-in clause was introduced, and that was the main point in which the general masses all over India, they were disturbed. The idea of the bail-in clause was to provide that the deposits of the customers could be used for the either restructuring or reviving the bank, and the widespread criticism was there. That is why this bail-in clause, that bill was required to be taken back, and another bill has been introduced about that. I shall be coming in my next video. Then in 2017, one more committee under the chairmanship of Sri Krishna Committee was appointed by Union Ministry of Electronic and Information Technology, that is MEITY, and it was considered to study the key data protection issues, and that committee recommended that likelihood to form the core data protection regime in India. And we know the systems of RBI on different card companies and different big companies, and RBI has been insisting and all had to accept that the data should be stored in India only. That regime has come, and the basis was that Sri Krishna committee. Then Aadhaar leaks were there. There were allegations on government that Aadhaar is not foolproof and the data is getting leaked, and it is an attempt by the government to keep surveillance on the data of the personal information. And the issue came up in the Supreme Court, and so many arguments and counter arguments they went on in the Supreme Court as far as this data is concerned. Now, since we have come to the end of this part of the series, we all know about the CVC and CVC guidelines, and suddenly CVC gave the guideline to issue the transfers of all the officers and employees, those who are at one place of posting for more than 3 years, and that guideline created havoc in the banking industry, and lots of problems were there. With this, I come to the end of this part F of this video. In next part, I will be talking about the NBFCs, then about the GDPs of the bank, of the government of India, how it went up, how it came down, and how the GDP has taken a backseat. About all these things, I will be talking in my next video. That would be part G of this video 4. I'm thankful to you for watching this video. Till then, goodbye. Next would be my video G. Till then, goodbye. Thank you.